Jessie, tell us a little bit more about your story and your current focus.
Okay, so my name is Jessie Banuelos. I am a certified insurance counselor. I have been in the industry for over 30 years. Currently, I have built a team of a family. So I have my son Roberto, my son John, my nephew Antonio, and my niece Sophia are all part of Team Banuelos. My career started back when I was a student at Cal. I am bilingual. I do speak Spanish, which a lot of my people for some reason don't know. And I saw a career path with insurance. And the reason I saw a career path is because most people pay for insurance and they don't know what they're insured for. They just have peace of mind that I wrote a check to my insurance company or I paid my insurance agent, and so I'm covered. What's interesting about insurance is not really what's covered, but what's not covered and what's exposed. And so I took the bull by the horns, and I was like, I am going to educate people about insurance, and that's what I do. And so I have been blessed with started as a customer service rep, and now and now I own 2 locations. So we have a large team. Definitely excited about insurance every single day. Insurance right now is challenging, to say the least. And so I just love that my family gets to be a part of it. When they were minis, I was a working mom, and now as adults, I get to be their boss.
Fantastic. Love that story. Love that story. I want to transition to Jim. Jim, tell us a little bit about your story and your focus.
Sure. I'm an East Bay guy. Grew up in Pleasanton, so just fell in love with the area. And I always say I know that the East Bay is home because when I travel, I actually miss it. So I miss this area. I'm 4th of 5 boys, all year apart. So we're originally from the Midwest, but traditional kind of Midwest family, lots of kids, lots going on all the time, very competitive. You had to be competitive to get your share of the steak that night, or it wasn't happening. So I learned to be competitive. I admired my father in business for many years and wanted to be a businessman. Didn't know what that looked like. Did all kinds of sales jobs, and fell in love with mortgage kind of by accident in my late 20s, early 30s, and ended up just building this career that really I feel like it found me. And we didn't have a lot. We didn't go without, but we didn't have a lot. Certainly wasn't a wealthy family. And I say that because for whatever reason, I've done the best work that I've done, and the most productive work has been with the high net worth group. People who have done well and need counsel and advice when it comes to mortgage and strategy, and they need execution. For whatever reason, I've really, like I said, I feel like it found me. I've really connected in that niche and built my career on it, and it's been amazingly rewarding.
I love that part where you say it felt like it found me, and I can't help it. What you said, Jessie, in the beginning, right, where you said I saw this huge need, and you said you started in customer service, and you said, you know what, I'm resolving to go educate everyone I can about this need. So tell us that story of perhaps how the insurance industry found you. Like, what was the one where it just kind of everything changed? You're like, okay, this is it. I'm going to do this forever now.
So initially, I was going to school with the hopes of becoming an attorney. I wanted to move to New York. Never wanted to get married. Did not want to have kids. 3rd marriage, 7 children later. Life plays a joke on me, right? Actually, it was when I asked the people that I was working with, so tell me how this insurance policy works. And they basically said, don't ask questions, just collect premium, and we're fine. And I just thought, oh my gosh, like that's so bizarre. Like, why would someone hand over money and not know what they're actually getting for that dollar? And so I just thought, gosh, I mean, this is just, it's insane, right? I mean, and then I asked my parents about their insurance, and they just said, well, just ask Jerry, he's our agent. And I said, well, Jerry's my boss, and Jerry won't explain it to me. So yeah, I just thought, you know what? I think that I was always meant to be a teacher because that is how I take my role. Is I teach my team, I teach my colleagues, I learn from my team, I learn from my colleagues, and so yeah, like Jim, insurance found me. No one ever wants to grow up and say I want to be an insurance agent. Although I did have four in my family that have grown up to be licensed insurance agents. So it just, I think it's a calling. I just think it was just right place, right time, right mindset.
Absolutely love the focus and the dedication and the 30 years and starting from the bottom and working all the way up. That is just incredible. Now you have 2 locations. And what would you say has been the biggest change, right, in the last, you said insurance industry has been a little bit, it's been struggling or challenges, the last 6 to 12, 24 months. Talk about what's changed, and maybe most of us don't even know this change is happening with insurance.
So insurance companies obviously are a business they're in the business to make money, right? I mean, every business is in the business to make money. They need to be profitable. What has happened really that has really changed the market is the last 5 years of catastrophic losses. So we've had year after year after year of firestorms and firestorms and firestorms. And if you remember last year, I mean, all of the West Coast was on fire. Insurance companies just haven't been able to price and collect enough money to pay out the claims. And so what we see is insurance companies leaving the market. So when AIG left California, that was huge. That was totally indicative of, oh my God, we're in crisis. Like, what is happening? I represent many insurance companies. My primary carrier is Farmers Insurance. We are based in California, so we are here to stay in California. It is a 93-year-old company. State Farm is probably older and bigger. They cover most of the United States, if not all of the United States. But they really, all of the insurance companies are struggling. So I think because they play the price war, they have commoditized insurance. And I think that this is where the general public doesn't understand what is the purpose of insurance? What is it meant to do? Well, it's meant to protect your financial assets, right? It's meant to protect your financial future. So if you buy that $2 million home and you insure it for $1.2 million and you pay $800 a year, are you confident that you have the right insurance policy? Are you confident that all of the perils are covered that are necessary? Earthquake is not going to be covered. Flood insurance is not going to be covered. Do you know the difference between an H03 policy and an H05 policy? Most of the public do not. So that is where we, as your insurance professionals, will sit down with you and explain to you the various different coverages. Right now, the insurance companies just can't price for the exposures. And so insurance companies have reinsurance. That means that an insurance company has to buy insurance. So for every dollar that is exposed out there, they are buying insurance on that dollar of exposure. The reinsurers really are they're first front lines when it comes to paying out claims. So much like your deductible, like you have a homeowner's deductible of $1,000 or you have a collision deductible of $1,000, insurance companies also have a deductible. And so the reinsurer will pay the first X amount of the claim, and then the insurance companies then have to pay the rest of the claims out. 5 years in a row, they paid multiple claims and billions of dollars of claims. They don't have billions and billions of dollars of assets anymore. So then what does that do? That really taxes the market. And what are insurance companies doing? Has anybody tried to call Geico lately? Have you seen what's going on in the headlines? Geico shut their phones down. They shut all of their California offices down. They fired all of their California employees. So what does that tell you? That tells you that this, 15%, 15 minutes will save you 15%. This price war that they're paying, now the insurance companies are paying the cost of that.
Wow. So much there to unpack, and I want to get to a few things here in a minute. I want to shift to Jim and maybe catching on some of those themes, Jim, of having somebody that has the nuances when it comes to mortgages, right? And it comes to inflation and interest rates, and having someone to guide you, because really what it comes down to is having an expert to guide you through these big decisions, right? So talk about being a mortgage strategist and how you help your clients navigate what maybe most won't see on a traditional, go get a lender and just get a low rate.
Yeah, so, I think that if you look at kind of the last several years, we've seen everybody's kind of been conditioned to interest refinancing. We've all become experts in refinancing, right? Everybody that owns a home has refinanced several times, most likely. And it was always, you know, the rate's going down, lock it in for 30 years. Almost everything was 30-year fixed. As rates are going up, we're seeing there's a couple things that I think are interesting. One, I'll go back, when rates were going down, one of the pieces of advice that I was giving as we were getting close to that bottom and rates were just getting unbelievably low was buy it down further, right? Spend extra money, buy the points, which makes the closing more expensive, but it gives you a long-term lower rate, typically a 3 or 4 year return on that investment. So if you're going to hold that house for longer than that, then it made sense. If you're buying 30-year money, 30-year fixed, then you're probably planning to do that. So we did a lot of buy downs to really drive that rate to unbelievable lows. Now that rates are rising, or that they have, and now they're starting to come back down, we have to look forward and say, what are the plans with not only the house? We always look at how long do you think you're going to be there, but what do you think is going to happen with inflation? And the reason that's important is because if inflation comes back down, mortgage rates are likely to come back down. And my opinion is we either have already seen peak inflation or we're going to see it in the next month or two. So we're right about the top. Mm-hmm. The Fed has been aggressive in raising rates, which controls inflation and lowers the long-term rates. Very, very important point there. So the strong Fed action has brought, in my opinion, inflation back down. We're seeing mortgage rates start to come back down. What does that mean? I think it's probably likely that someone taking a mortgage today and probably the next several years will refinance in the coming years. They're going to refinance probably in the next 7 years or so. They're going to refinance maybe multiple times. So does it make sense when rates are at the highest? Remember, a 30-year fixed is the most expensive product you can buy in the mortgage world. So do you want to take a 30-year fixed if rates are going to come down and you're going to refinance? It's not anymore about how long will you be in this house. It's more about how long will you be using this money. So let's find a more efficient way to borrow, and that's what I can help people to do. So that, keeping in mind that as you utilize an adjustable rate mortgage, something that's fixed for 5, 7, 10 years, it increases risk. So I'm extra careful in those situations to be diligent and responsible in providing that product.
Yeah, great insight and great nuance, and you really got to have someone like yourself, right, who are experts in those little nuances and those details to navigate that. And kind of the analogy that Joseph was using about being in a boat and there's a lot of wind and waves and changes that are going on. And so with that being said, Jessie, what are you seeing in regards to besides the increase in premiums or the challenge with the insurance, but from the personal or the investor, what are some of the questions they should be asking to make sure that they're properly insured?
Well, one, they should be asking, who am I working with, right? Because that's what's most important, is you want to work with a professional, someone who truly understands. We have a license, we all go to school and take our tests, and we have an insurance license, but really, who's investing in their education, who is staying on top of the market, who is actually diversified. We're diversified in our office, so we have a very strong homeowners and auto insurance team, and then we have a very strong commercial insurance team. So I work with a lot of these people that are sitting down here in the audience in insuring commercial investors. And so my advice always is, one, who are you working with? What company are you insured with? Is there a way to consolidate your insurance under one umbrella company? Does it make sense to insure everything with State Farm or with Farmers, or to go to the independent market? I would say definitely be prepared for the rate increases. Don't always shop for a rate, but shop for the quality of the carrier, because what's most important is you want to make sure your claims are going to get paid. You want to make sure that your carriers like Geico are not going to leave California and leave you, holding the bag. You want to shop early. So if you are going to purchase a property, You want to make sure that you're qualifying that property for insurance, because oftentimes our team is put to the test. We are known as the fire drill team because we will get called on a moment's notice and saying, my client is trying to pick up the keys to their lease. They need insurance today. In the midst of COVID, in the midst of the holidays, we fire up the computer and we get it done. We have a deal that actually weren't able to help on. The property was currently insured with us, but because the underwriting guidelines have changed, the property is now situated in what they call a wildfire area. And so the current carrier said, we don't want to take on the new risk. Unfortunately, one piece of the property had 40 amp electrical, which is ineligible for most insurance companies. And so they were trying to close. So my thing is start early, qualify your property early. If you've identified the property that you're trying to purchase, definitely see, is it insurable? We do it all day long for all of our referral partners. And so, and don't always shop on price, shop on reputation.
Talk to us real quickly about, life insurance, if you guys do that as well, right? And maybe things that have maybe changed the last few years, whole life versus universal versus, standard fixed, life insurance. Talk to us a little bit about that.
So life insurance is not a one-time purchase. It's not a one-size-fits-all. It really is sitting down with your insurance professional and going and analyzing how much debt do we have? How much income are we trying to protect? How many mortgages do we have? What kind of education are we trying to provide for our children? We call it the dying exercise. And then there's different product that's going to fit. So you want, like, if you have a 30-year mortgage, you're going to have a 30-year term policy. If you don't have a retirement plan with your employer, maybe you're going to look into some whole life or some index universal life or variable universal life. So it just really depends, and it's not a one-size-fits-all. And once you buy an insurance policy, hopefully you have a great insurance professional. Team Banuelos is here to help. But we will sit with our clients annually. We offer that annual review. What's changed? Did you have a baby? Did you get divorced? Are you getting close to retiring? Did you leave your job? I've had people turn down life insurance because it's provided by their employer, who 2 and 3 years later will turn around and say, oh, you know what? I got a new job. I don't have that benefit anymore. And now the insurance premium is higher. So there's also a qualification process. And so not everybody qualifies for life insurance. And there's also so many different products out there. And we also work with different professionals. So if we don't have a policy that fits for whatever reason, we partner with other people to help us work with that individual to make sure that they get the right protection.
Very well said. It's good insight there, that it's never one size fits all. You gotta have an expert to help you, and you gotta navigate what you're really trying to solve for. So shifting to Jim. So Jim, right now with inflation, talk to us a little bit about that, what you've seen here in the last year or so, and how that actually affects mortgage rates, or maybe some of the nuance that people don't really realize, that just because inflation goes higher doesn't necessarily mean rates are higher. Walk us through that, and maybe where do you think we're going to be in the next, I know it's hard, 6 to 12 months. What's your, if you had a crystal ball, what would you say rates are going to be?
Yeah, that's a tough question. But as far as I alluded to earlier, the interest rate, the Fed, we're seeing interest rates at inflation at 9.1, which was the highest rate since 1983. The Fed has been aggressively increasing short-term rates to slow the economy. We have seen in both quarter 1 and quarter 2 gross domestic product have been negative, which indicates, it's not been declared yet, but it indicates that we are already in recession. So we're seeing everything, the economy start to cool off. It was overheated. That's what inflation really indicates. So as we see this cool off, the bond holders, people who invest in mortgages, if you're lending someone $1 million on a 30-year note, typically you plan on having that out there for 10 years before they refinance, sell, whatever. If your cost of money because of inflation, that $1 million is only worth $500,000 in 10 years because of inflation and what you can use that money for when you get it back, you're in a bad position. So not a lot of investors want to be involved in mortgage and long-term debts like that when we see high inflation. So everybody's trying to forecast where we're going to go, what's going to happen with inflation. So every time you see the Fed start to raise rates and do something aggressive like they've done, it attracts investment into mortgage, and we're seeing that through a lower yield. And so one of the most closely correlated instruments to mortgage that you can track easily at home is the 10-year bond. And so the 10-year bond hit a high of 350 recently. It's down to 275 today, which just kind of shows you, percentage-wise, that's a really big move. That kind of shows you what mortgage rates have done recently. So where do we go from here? It's going to be data dependent, of course. I'm tracking Jay Powell right now. How am I doing? Data dependent and irrational exuberance. We'll go back to Greenspan. But it's going to depend on what happens with supply chain. It's going to, if we can keep getting more and more relief from the supply chain, that's going to ease inflation. If the economy does stay cool, then we're going to see more investment into mortgages. Mortgage rates will come down, and I think what's interesting about that is two things. One is, as rates went up, all the real estate agents will tell you rates going up really stopped the enthusiasm of the real estate market, right? So we saw values start to come back down because rates were high. It's the affordability gap, right? So if that's the case and rates are coming back down, and if we think that they'll continue to do that because of controlled inflation and supply chain relief, that's going to be supportive to real estate. So right now, a lot of buyers are on the fence thinking, I probably shouldn't buy because I'm worried about high interest rates. And I think there's probably a lot of buyers that are getting that wrong. I think there's a really good opportunity right now to look at the market objectively and see where this is going, because it will be supportive to values if the rates come down. And the other thing I'd say is that if the rate, which is higher today than it was a year ago, if that's still kind of stretching you a little bit, and you think that you want to stretch to that bigger place, there's two really easy ways to do that. One is the sellers can pay your discount points and buy that rate down. So it would sell for the same price, but the seller's going to pay the closing costs, which can bring the rate down, which makes it much more affordable. You could actually, in essence, get last year's rate by doing that. The other thing is that for very well qualified borrowers who know they're going to be refinancing and that this is just a kind of temporary money, but to buy the right property, an interest-only loan can make a lot of sense right now, because you're not going to carry it for a long time. So we don't need to worry about paying the mortgage off and what's the amortization, all that. We want to worry about what's the rate, what's my borrowing cost, what's my payment, because that's going to create more affordability to get the right house. And when we see interest rates a little bit higher than normal, that's the time to buy a house, because you're going to hold the house a long time. You're going to hold the mortgage for a shorter period of time, most likely.
Yeah, very well said. And so we're running out of time here, so I want to kind of dial into a little bit more personal here for a second, if we can. We've been talking a lot of strategy and a lot of thought. So, you guys ready for a quick lightning round? We're gonna go back and forth real fast.
Oh, okay.
All right. If you,
She's gonna pay Shane.
Jesse, if you can go back to your 25-year-old self, what's the one golden nugget make sure to tell yourself to do?
Stay the course.
Same to you, Jim.
Get outside and enjoy this beautiful state.
What part of the state haven't you yet enjoyed? Because California is big.
It's big. I have not spent time in Eureka at all. So I need to get out there.
Jesse, same to you. What part have you enjoyed yet?
Probably more Northern California, close to Shasta. I think that's somewhere I'd love to go.
That's just amazing. Question number 2, starting with Jim. Jim, what's the number one book you've recommended or gifted the most in the past year?
In the past year, No One Succeeds Alone by Robert Refkin.
Excellent. Jesse, to you.
Shelley Abercrombie, Unapologetically Ambitious.
Oh, I like that. I feel like that should be your brand, Jesse. Maybe my brand too. It's a good one. Next question to Jessie. Jessie, what are you most curious about right now?
What am I most curious about right now? I would say, am I ever going to have grandchildren? But no. I'm most curious really to see where the independent insurance agent is going to go, because everything is, AI and automated and bots and this and that. And I really want to task my team and my colleagues to keep it personal and let's stay relevant. So I'm really curious about how do we do that.
Love that. Great answer. Jim, same to you. What are you most curious about right now?
I'm curious about international community. I'm curious about how we all, as 7 billion individuals, collectively coexist and learn a way to work with each other with what you talked about, with all the people that you've had up here, with real estate, with crypto, finance, with understanding how a foreign government making a little tweak to their cost of money can affect our cost of money and therefore the cost of real estate. We all need to kind of understand that and work together on these things a lot more closely than I think we have in the past, and where it's been more disparate per country.
Absolutely. Second to last question, Jessie, starting with you. What's the number one leadership quote or theme that you strive to live by?
Well, the quote I strive to live by is be kind. I just think if we were a little kinder to each other, we would be in a better place.
That's great. Jim, how about you? What's the number one leadership quote or theme that you strive to live by?
I've built my career on, I'll say this one, I built my career on hire people smarter than me. And I've done that, and it's worked out really well.
Excellent. Last question, starting with Jim. Jim, what's the number one habit you try to practice to keep you centered in your values and to stay encouraged to charge forward to reach new heights?
Gratitude, daily gratitude. Very, very appreciative for everything that I've got, the beautiful family I've got, the amazing place that we live, this amazing career that I've got. It's all super great.
How do you practice that? What does that look like?
Prayer from me.
Beautiful. Jessie, same to you.
I have to say you stole it. Because I think that, I live in gratitude and I live in forgiveness. I have a 25-year-old son that unfortunately 6 years ago had a catastrophic brain bleed and is now bedridden, doesn't walk, doesn't talk, he's tube fed. He has the best smile and the best laugh in the world. And the fact that this young man, with all of his deficits, can smile and blow kisses. He doesn't talk, but he speaks with his emotion. It makes me grateful for every little thing, from being able to scratch an itch, to brush your teeth on your own, to take a walk out in the rain. Living in gratitude is, I think, one of the best virtues, and I think that really is what keeps me going.
Beautiful, Jessie. Thank you for sharing that. Thank you, Jim. Thank you, Jessie, for being here and sharing your wisdom with us. I want to encourage you to keep making a huge difference by being a specialist in your area. Help families, clients, friends make great decisions with their mortgages, great decisions with their insurance. For those who want to get in touch with you, Jessie, what's the best place for them to find you?
You can find me in Orinda or in Pinole or jviadvisors.com.
Beautiful. And Jim, same to you. For the best place for people to find you?
JimGalup.com.
Amazing. Hey, I want to thank everybody for being a part of this, whether you're watching it online, on a replay, and everyone here live in Berkeley, California. And this kind of wraps up although we're going to go to questions and answers here in a minute, so don't forget about that.